Hi, good morning or good day. It's Friday, 22nd of June 2018. Welcome like every day to Real-Time Daily Trend Ideas, our webinar every day to the same time. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, markets, feeling, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day, and we will start like every day with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the Berlin guy. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices. So my English, made in Germany, but hopefully some of my quality too, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, like today, it's Dirk's day. Our leading day traders live every business day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 CFD typically fixed bet of just 0.8 points during the main trading hours. Check all the details out on admiralmarkets.com. Yeah, and also we like to bring your attention to the upcoming changes for the Forex and CFD regulation in Europe. The ESMA regulator made some changes. It will be effective at our markets from Monday, 30th of July 2018. There will be a difference between retail clients and professional clients. If you like to see and read more about that, just visit our webpage, for example, admiralmarkets.com, and you will find everything what we offer about that. We will have an offer for retail clients. We will have an offer for professional clients. There are some differences. You will see it here on this slide. And yeah, check it out or call us or contact us. You can call us and speak about with us, or you can send us an email, and also YouTube and Facebook you can visit. Everything's linked from at admiralmarkets.com. They will find also something about our regulatory background. But now it's enough from my side. Now it's time for Dirk. Hi, good morning, Dirk. Good day. What's your view to the markets today?
Yes, good morning, Jens. Good morning, guys. Let me just transmit the screen first and check out this box to the downside here at my screen. All right, so let us have just a short view on the DAX himself, or itself, let's say. Some traders say herself, so they think the DAX is maybe something like a dolly or a girl or a wife or whatever. Let's have a look at the high, the record high. This is still the old record high in our view here, and it looks like we are walking a long way to the downside from this one. Have a look at this current markers here. And this is the long-term view, so you will see some interesting, let's say 61.8ers, as I always tell you that these marks are quite important to see. We leave that line here at the screen, and we will be deleting this Fibonacci, long-term Fibonacci analysis here as well. We will be going to even to a weekly chart just to check out the last low, the really last low here. And we'll have a look at this one to the upside, to the record high as well. And you will be seeing that we have another Fibonacci line here. This is the 23.6 at the level we have been yesterday. Let's see if this is correct here. Hold on a second, please. This is the low and this is the high, so that's quite right here. So around the level of 12,450s. Not really far away. We scratched that one already. And now we are going back to the daily and to the opposite of Fibonacci from the downside, from the low up to the last high. Exactly marking that one here. If you look at the date, that's the 22nd of May. And we will be looking at the last high here. That's 14th of June. If you look and at your calendar, that's the ECB day last week, and the next one happened with the quadruple witching day, as we already spoke about that last week. All right, let's have a look at these markers as well here. So we will be, let's say, designing or looking for so-called double Fibonacci meanings here. So we will have this one. Look to the downside here as well. Hold on a second, please. It's the 50% here already. So we got two so-called cluster zones where we are still trading around. So the one to the downside is the 12,440s. One to the upside is the 12,850s, 12,870s. So this is a so-called a rebound zone where you might try, to get long and place your take profits, for example, or you shall be waiting until the market is moving up a little bit right now to almost the middle or the 61.8% of the yesterday's candle, just to reverse a little bit and to go short again, just to have something around the so-called new called bias. All the time we go back the last years, we had the so-called bias that all the guys traders spoke about, something like let's say by the FF dip. So that might change into by the FF low spike or high. So the bias changed from selling, from buying into selling, I guess. So every spike you see in the German DAX, every 1 or 2 or 3 day upside is a nice invitation to go short or to place a new short. The only reason why, well, look at the current fundamentals, look at the story around the trade war, the trade conflicts going on, and look at the first DAX companies who are already adjusting their forecasts. So if you just screen the market this week, if you screen some tickers like the Reuters tickers or whatever you use, you will see that the DAX company Daimler already adjusted its forecast to the downside. So that means that the EBIT, so-called earnings before interest rates and taxes, and earnings before interest rates and taxes and depreciation administration and stuff like that, will be going to the downside. So that means that the trade war, that the tariffs already have an effect on companies like big companies like DAX companies, and Daimler won't be the only one. Companies like Volkswagen, like BMW, and even like ThyssenKrupp or other companies will suffer as well, and that will be dragging the DAX more to the downside. I can't believe that we will be seeing a DAX at 13,000, 13,700 or whatever when all the stuff like this trade war, trade conflict is still going on, still taking place. So that's the reason why I said that the bias might have changed. Besides that, we have the fact that interest rates are slightly going up in the US, and then they might be going up in the ECB next year. I'm not sure if that happens, but they say between summer and autumn in 2019, the first rate hikes at the ECB will take place. You will be surprised to see that, but they're already speaking about that. The market is already speaking about that. Okay, let's just draw these so-called trading boxes, as I always do. So this might be something like a reverse zone for just for the first half of the day here, and there might be a so-called cluster zone here, as I already drew that one with those 2 Fibonacci lines here, where you might take advantage of a new short position, or even when it's getting close to that one. Okay, so let's just check a couple of news, because I wanted to talk about those tariffs shortly for 1 minute, because there's always the meaning that it's only between the US and China. Now it's on top of that, Russia started with some tariffs, and this morning you can read about India placing some tariffs, and the European Union. I mean that sounds quite ridiculously right now. 2.9 billion euros of imposed tariffs just against stuff like jeans, bourbon, and stuff like that. It's something Donald might be smiling about, but however, they just started that, and we will see how all this stuff will go on. So one thing for sure, it won't be perfect and won't be positive for the DAX in the long run. Okay, so this is the thing about the DAX 2 days perspectives of a reverse and a new short position. Let's check the data we spoke about last week. Just have a short look at the Eurobond future. If we just go to a little bit of a wider picture here, we see those two lines. I draw that one, this 162.36. I draw that one last week, where I said we might be heading into that one because this was a 61.8 Fibonacci as well. As you can see that yesterday's candle directly scratched that one and went to the downside again. The next target to the upside could be the 163.98 level. So where does that come from? The thing is, all you know, I'm using a lot of those Fibonacci tools. If you just have a look at the longer term view, weekly, and you will see this high here and the last low. Just widen that picture, of course. And you will see that 163.98 level is a 61.8 level here. We already scratched that with the happenings here in Italy. So that 61.8 got already tested, then went back to the downside, as we already spoke about that as well. And now we are checking to the upside, back up again into these 50%, which is almost at the same level like this 61.8 from the short-term analysis at 162.36, and the next target to the upside, as I said, 163.98. To the downside, of course, some corrections might be possible in direction to the 38.2 level, which is the first level getting touched at the weekly. So that's the 161.05. That one will be deleted now, and going back to the daily, and just to implement the target to the downside on the daily as well. And when you go to the last low, to the spike high here, you will be seeing some levels of some possible targets to the downside here, and these levels are almost at the same level like the 161.05 was 106 from the long-term analysis already implemented. So this level of 161, 161.10 is something where the market could be heading to. Next target would be the 160.20s. So things like that are not something like some really big news, some really big inventions, and it's nothing like about a so-called Merlin's ball, glass ball. We don't have that. Jens doesn't have it, me either, and all the guys out there trading, they don't have it. This is only technical stuff. This is a lot of fundamentals which is being drawn into that as well. But in the end of the day, the market is quite reacting in this kind of a movement, in this kind between those two Fibonacci lines. And as I always tell you, that you got the so-called trading boxes to the upside and the trading boxes to the downside. And as I always do that, I will do that here. On top of that, just have a look at this 162.30s here, and a look at this 161.10. So these kind of trading boxes are the so-called short box here and the so-called long box here to the downside, where some reverse could take place. In between in the short-term analysis, go at the 1 hour chart. I will be deleting all this stuff because now it doesn't make sense anymore, because all these kind of lines are just disturbing. Oops. Happened. Okay, let's delete. Bam. So now we go at the hourly chart. Just have a look at the current high and low, and we'll be drawing this Fibonacci system here again on the high and on the low and on the high, and you will be seeing that downside move into that next zone, which will be kind of interesting, is again this 61.8 level, which is the first level to be getting touched at 161.60s, 161.70s in between that. So that's the first target to the downside, and of course the last low around those 161.20s, as I said. We will be going to the next market. Is where is it? I didn't open that. Okay, let's open that one. Show all. I simply forgot to open that before. It's all about preparation. Where is it? Just wait and hold on a second for me, please. Jesus Christ! There you go. This is a typical currency pair, which is very dangerous to trade, of course. A couple of traders are, they really got hit by this these kind of moves. But if you see, the Swiss National Bank right now had this had the so-called rate decision here. They didn't change much. Once they spoke about the current market situation with Italy and the Eurozone as a whole, Mr. Jordan also spoke about that the Swiss franc is still a safe haven, of course, but still very much overvalued in his opinion, and that the Swiss National Bank might be interacting and having interventions. So he spoke about interventions, possible interventions at any time. So what does it mean? Interventions, of course, usually from the Swiss National Bank or more to the upside, but of course you can be killed, you could be killed in a second or in a minute with a huge spike in both directions, just to be sure from the central bank, just to be sure that everybody is wiped out before the rocket launch is going up to the hitting heaven, skyrocketing. What can we do in the long term? We will be having a look at this high, the last high, which was very close and around this 120s already. So that former Euro Swiss peg, which is around the 120s. So they almost reached that, and after that, that Italy mess started, and we went down, all the way down, as you can see, until 113, almost 113.50s. Okay, what can we do right now is the next move to the upside, which might be getting interesting in when this 23.6 level is holding, is kind of a little bit of a bottom. We will try to figure out. We won't be taking too much risk. So if you step in right here, you won't be doing a stop loss in that kind of area between 114.20s or 114.50s. You try to operate with a 20 pip stop and move the stop loss into the entry as fast as you can, just to be sure not to be getting wiped out after some short and heavy moves. Where is the target? Where could be the target? The first target, as you can imagine, is the 50%, and on top, most important is the 61.8 level again. The 61.8 level is at 117.60s. So that might be a target for a Euro Swiss franc long. Shape is here. Okay, so a thing what I wanted to try out is before I go to another trading situation, is that I just simply wanted to try out something, Jens. Let me just check out if that works, if that stuff gets transmitted here as well. You got the so-called colors here. You might be seeing something right now, and just tell me if you see the red lines when I draw them. You see this one. You see this one. Of course, I try to draw. I'm really bad in that, and I need to absolutely to end up with a drawing, unless otherwise you might be thinking, what the hell is this guy doing? Just to make a little bit of a fun. It's almost weekend. You see, there's one guy looking at the DAX right now, and he's a bull, and he's not in a good mood. The reason why I just draw that is, of course, not making fun of you guys when you are long or whatever. So the thing is, when you see stuff like that, and when you see those ties and those tops, this one on top of that looks like a double top. Of course, there's one here as well, which went down, which would be ended up in the downside move, in a really, really heavy downside move. And on top of that, when you look at the last low, where you got the combination, the Fibonacci combination from this low to this last 22nd of May high, you get Fibonacci projections to the downside, and the downside levels which are projected with 138.2 Fibonacci and 161.8 Fibonacci is something between these levels here, between those so-called 12,150 levels, which would be a target to the downside in the run of a couple of days and weeks. Excuse me. And the reason why I just show you that is you might be interested in what is the reason that I'm so bearish. The reason why I'm so bearish is just the things I told you, because earnings are very much important. They are important for every company in the German DAX, and we are all these 30 DAX companies are export companies, very much exporting into the US, and of course the biggest market for a lot of DAX companies, and I'm talking about Daimler, BMW, and Volkswagen, for example, is China. And if the US is hitting China right now, and they will be hitting them very much with all this trade tariffs in the long run, the German industry, the DAX, and other companies might be getting hit as well. We might be getting squeezed between the US and China, and that's in the long run. This is of course very important to say that there is no need to buy into this downside move. The only thing I said about this bias just a couple of minutes ago is that you changed it, and every time the market is a little bit of rocketing up and having a relief rally of a couple of 100 points maybe, you might be having an idea of going short again, just to be sure not to be stepping into the wrong side. All right, so now we go to another one, that was gold. We spoke about gold and some kind of a relief, a possible relief, and I draw that trade box here. I'm not talking about winning all day. This one was really bad. It went went down, and we crashed out of this position. So this long position wasn't very favorable and not very prosperous. So in the long run, you got a new step in around these pivot points at 1270s. And this morning it was quite interesting that Euro-US dollar was at around 116.50s, 116.60s, and gold was a little bit down. So from the euro perspective, gold was cheaper for a couple of hours. That might be getting interesting for some buyers out there in the eurozone to just accumulate some gold at this kind of a level. If you look to the upside, there's only a reverse possibility first at this trading box here at the 1280s. Right now, gold is really looking knocked, but if you look at indicators, for example, those oscillators here, relative strength. Oops, that wasn't the relative strength. I missed the spot here. Here we go. You will have a look at the level here, which is already oversold territory. So that oversold territory, if you look back in the charts, in the daily charts, if you look back into this kind of zones, it might be getting a little bit more favorable to try to catch a knife here, to try to catch the bottom and to build up some positions. In the long run, if you look at interest rates and if you look at current geopolitical stuff, gold had no effects with that. Surprisingly, no effects with that. You might be getting the feeling that one state is selling gold massively or one big fund is selling gold massively, but I can tell you from the fundamentals, ETFs, exchange traded products, exchange traded commodities, all these kinds of funds and structures are buying gold, and they're still positive for the year 2018. So they're still accumulating, and the big sell-off didn't take place. So there must be one position somewhere, some really big seller, that the pressure on gold is still holding. Okay. So Jens, I spoke about a couple of markets. Maybe there's some kind of yeah, let's say a market that people are wishing for, guys are wishing for.
We are running already the webinar 26 minutes, so the time is our limit.
Oh.
Tomorrow is another day, but tomorrow is weekend, so I wish you all a good weekend already now. And the next business day is on Monday. On Monday, same time, real-time daily trading ideas with Jay Medvo. Again, happy weekend all the time for today. Good trades, and see you soon. And if you'd like to see this webinar again, a couple of hours later in our YouTube channel, if you'd like to see it. Greetings, and the last words from Dirk.
Yeah, as Jens already told us, the webinar will be implemented at YouTube, at the YouTube channel, and I'll be retweeting that and sending that out to you guys as well if you're just wanted to listen to a couple of opinions again. One thing for the longer run, if you have a look at the German DAX, not only for today, just have a look into the new week. Just on Monday, we will be having the German IFO index, which is quite important, and that one is going to be released at 10 o'clock. So you might be interested in that one here as well, and maybe try to think about moves and stepping in before or after that. Okay, I wish you a perfect weekend, relaxing weekend, and as you like, we will hear us again next Friday, 11 CT. Bye-bye.